Hey everyone, this is Darren from Daily Crypto Trade Signals coming to you live from Vietnam, guys. It's a great time to be alive or not, guys. And, let's jump into it. Let's not delay. Remember, this is not financial advice. Get ready to go down the rabbit hole with the OG in the house. Now, I know a lot of you have wondering what's going on. We're seeing this crypto flash crash. Also, we got the Biden executive order that's coming out next week. We're going to talk about that much more. We're going to talk about what Michael Saylor has to say about all of this crypto downness. Now, also, too, I've noticed that, there's a key date, January 24th, January 22nd and 24th. You guys need to keep an eye on this. If we break down below this date, then it's all over, guys. We're out of there. So let's jump into it without any further delay, guys. Let's get it. And don't forget to go down there, smash the likes, subscribe, YB in the house, and show some love, show some support, guys. Remember, share this video and get it out to your friends. And even send it to people you don't like, guys. I love it. You love it. Let's get it. So right now, we're seeing that the pre-markets yesterday, they had a huge tank. We saw the Dow was down almost 2%. We saw the S&P was down 2%. The NASDAQ was down almost 3%. So, what is causing all of this Debbie Downer stuff? It's a combination of a whole bunch of things. One, it is the FOMC meeting that came out. They did indicate that, inflation is out of control, that we're going to see a rate hike in March, probably more than 50 basis points. And, the biggest reason that we saw all the crypto markets go down and what is affecting you is the U.S. presses for diplomatic solutions, as we see that the markets are hit by the latest, Ukraine-Russian tensions. So that is what has really brought all the markets down. You can see that, there's been some pot shots exchanged on both sides right now. And, a lot of people are wondering if this is actually going to escalate and create things to go down even more. So, guys and gals out there, remember, this is not the end. This is only the beginning. And remember, these geopolitical conflicts, they often resolve themselves. They often wash out. We've absolutely been here before. Sure, in the short term, we see that the volatility is not looking too good. We see in the short term, things are looking bad. So if you're one of these, leveraged apes out there, you got wrecked. You absolutely got wrecked. We're going to talk about the wreckage as well. But remember, if you have diamond hands and you have strong fortitude and you can stand the heat, and, crypto is volatile, guys. Absolutely, crypto is volatile. Never invest more than you're willing to lose out there, guys and gals. So right now, we're expecting to see that Biden is expected to issue an executive order on crypto and CBDs next week, report said. So, this is the 81st executive order that Biden has signed. And this executive order is basically, they're going to be discussing two things. One, they want to expedite the U.S. CBDC. So that is a good and that is positive. And also, too, they want to expedite the regulatory framework moving forward for crypto. And in my opinion, and Michael Saylor is also saying the other thing, that once we have a proven and a concrete regulatory framework for the crypto space, this is going to be positive, and this will allow more institutions to ape in. So we're going to jump into Michael Saylor, and he's going to be talking about three to four catalysts that he thinks that could help provide a framework and an environment for Bitcoin and crypto to explode even more than it has been and it will be in the future, guys. So, basically on Thursday, the report from Yahoo Finance basically said an official familiar with the matter with the Biden administration revealed an executive order could arrive as soon as next week, guys. And the directive from President Biden would reportedly order the Office of the Attorney General and the state and the Treasury to study the potential rollout of U.S.-issued central bank digital currencies. So that is bullish, guys, because remember, once we have a digital currency, the distance between fiat and digital currency is like this. But once we have a digital currency, and the distance between digital currency and crypto is very close. So this would, be another gateway to allow people to ape into crypto, and that means more liquidity going into the market. And if we have more liquidity, the alien loves that, and that is really good news. So under the executive order, the Financial Stability Oversight Council would study financial stability issues regarding and resulting from introduction of cryptocurrencies. So basically, this whole 81st executive order would reportedly be used to develop a comprehensive regulatory framework for digital assets under the United States. And that is what is really important. Some other breaking news that's coming in. Ukraine has legalized Bitcoin, so that is cool from that perspective. So, right now we're seeing that, Bitcoin evangelist Michael Saylor says clear crypto regulations with speed, institutional adoption. So that is really important in the house. So let's take a listen to what Michael Saylor has to say. And he's talking about 3 to 4 catalysts that he believes will help power up and create an positive environment for Bitcoin. So let's listen in, guys.
Morally sound, politically sound path forward, and that's Bitcoin. I think people are starting to realize that now. If you're looking for catalysts for more institutional adoption,
and this is key.
I think that an approval of a spot ETF would be a catalyst.
That's the first catalyst.
I think that if FASB converts the accounting treatment to fair value accounting, that will be a catalyst.
Fair value accounting.
I think that additional regulatory clarity from the administration is going to benefit Bitcoin and accelerate institutional adoption of that asset. That's a catalyst.
What would that clarity be from the SEC?
So from that perspective, you can see that Michael Saylor is saying that regulatory clarity is really, really important. The spot ETF, and Gary Gensler, he's been talking about the spot ETF. It has been denied many times, but I believe that Gary Gensler still says he's open to a spot ETF, and I think that we'll see our first spot ETF probably approved sometime in the springtime, and that is when crypto is set to explode, guys. And then also Michael Saylor, he also talks about fair accounting practices. So this is really important that happens. So, we need to have regulatory clarity. And once we have this regulatory clarity, this will then allow the institutions to ape in like crazy. And once the institutions ape in like crazy, sure, we're seeing some institutions move into the crypto space, but we need to see a whole ton more for things to go uppity up, guys. So this is really bullish. And so guys, don't be afraid. Do not be afraid of regulation, guys. Don't be afraid of it. It is a good thing, and this allows mainstream adoption from institutions, because institutions are ones that are holding big bags and big chunks of currency, guys. So we can see internet versus crypto adoption. Right now, the total internet users is over a billion, guys. Over a billion users are on internet, and we're seeing that the total crypto users is not even, we're only about 25%. We're still at the same level where the internet was adopted in 1998. So we still have a huge ways to go, guys. And crypto relies on the internet. It's reasonable to assume that substantial degree of positive correlation, but as Web3 begins to take off, how might the rate of crypto adoption change? So you're seeing that, we have a lot of institutions, we have a lot of things happening right now. We have DeFi, we have Metaverse, and Web3, and we're seeing a lot of institutions getting ready, preparing for Metaverse and Web3 and aping. And we have Disneyland, we have McDonald's, we have a whole bunch of companies that are looking back and wondering what is going on. And we're seeing that Web3 is going to explode, and this is going to be the new internet, the new crypto revolution. And we're seeing that mainstream companies, they need to be part of it. They absolutely need to be part of it, guys. So let's take a look, and here's some more positive news. You can see that the chain analysis 2021 global crypto adoption rate, we're seeing that more and more countries are aping into crypto like never before. Top 20 countries based on the metrics: total crypto activity, trading activity of non-professional users, and peer-to-peer exchange volumes are weighted by purchasing power per parity per capita. So you can see here that the number of countries that are aping in, and this is individual users, guys. This is not institution. This is retail. This is you and me. Joe Public, Joe Nancy, guys. And we're seeing that Vietnam, India, Pakistan, Ukraine, Kenya, Nigeria, they're all starting to ape into crypto like never before. And this is just the beginning, guys. So this is the heat map. You guys all know about this. The heat map is, everything is down, down. Bitcoin is better than where it was before. Earlier it was just at 40,000. So we have come up almost about $700-800 since the time of recording. So that is pretty cool beans in the house. Something that's really astonishing and shocked me this morning is that yesterday the fear and greed out there was at 52. We dropped almost 20 points, guys. 20 points, and that is really unheard of. And you can see that, year to date, we've had this huge tankety-tank yesterday in terms of the sentiment. So this whole, Russia-Ukraine geopolitical stuff has really put the kibosh on the markets, and it's really scared a lot of people and put a lot of people, made a lot of people nervous right now. So let's take a look at the leverage apes in the house. Keep watching, guys, because I'm going to tell you that there's a huge day that we need to keep an eye on. And if crypto, Bitcoin, Dogecoin falls below this critical number, this line in the sand, then it means that it could be all over for crypto, guys. So let's keep watching. So we saw in the last 24 hours a ton of leverage apes, 307 million worth of leverage longs got wrecked. The leverage apes got wrecked, guys, and these are all leverage longs, guys. So we had 130 million of Bitcoin, 74 million of Ethereum, XRP, Solana, Shiba Inu. We had a ton of people got wrecked. 4.12 million Shiba Inu, leverage traders got wiped out, guys. So this just goes to point to one thing: stop leverage trading. And we're seeing that most of the positions got wiped out were long positions. People were betting that the market was going up, uppity up. I mean, stop it. I mean, if I was a leverage trader, I would not be doing that. I would be shorting because of the geopolitical tensions, guys. That's what I would be doing. But never leverage trade. It's bad, guys. So let's take a look at Bitcoin in the house. So right now, Bitcoin is trading at 40,741. And you guys have to understand that we have a key date that we need to keep in mind. And if we go back to January 24th, this is when Bitcoin went as low as $33,000. So if you can see, that drop from where we are right now to $33,000, you can see that drop goes from here to here all the way down here, and that is a negative 17%. So I believe that if Bitcoin drops again to $33,000, that's it, we're done like a donut. But right now we can still see that Bitcoin today has hit a low this week of 40,000, and that was only like 4 or 5 hours ago, and we've gone up again today to 44,750 was the highest this week. So right now we're trading at $41,498. So we're still above our low, so we have come back a little bit, but we're still inside this box, guys, and this box is very bullish. This is our horizontal support line. As long as Bitcoin can stay in here, I'm going to stay pretty confident. And keep in mind that if we do drop below back to this level, and we were absolutely here before, then it's not looking good for crypto, guys. So if we take a look at a Bitcoin on the 4-hour chart, once again, right now, we've got some support around 40,000. And remember, this is that big drop on the 24th of January. We need to stay out of this zone. So overall, yes, we had a huge drop today, and we've gone down all the way from here. Let me just move that over. So all the way from the 17th of February, right here, we dropped all the way from here to here. Let's get it. All the way from right there. We have gone down a total right now of around 7.9, about 8%. So we dropped about 8%. I mean, it's not a huge crypto crash. It's not like 10, 15, 20%. It's a slight correction, and we can see that we're getting a bit of a reversal now, guys. So we've already reversed the upside. If we take where we hit the bottom right now and where we are now, we've already recovered about 1.77%. So that's not too bad in the house. And if you look at our parallel channel line, again, as long as we stay above this area here, a parallel channel line, we are still going to be pretty bullish for Bitcoin, guys. So stop panicking in the house. Let's take a look at Dogecoin right now. So Dogecoin right now has been going sideways at 1409. It has gone down from where it was yesterday, and we have collapsed down a total of, we went as low as around about 9% as well on the Dogecoin. So this is once again, this is the January 22nd. This is a line in the sand, and we need to keep Doge above that area right here, and that is around about 12 cents. If we go below 12 cents, then it's going to be done like a donut, and we will definitely be going down to 9-10 cents in the house for Dogecoin. If we look at Shiba Inu, pretty much the same thing. Shiba Inu gave up around about 9%, and once again we have our line in the sand for Shiba Inu, and that line in the sand is around about 16.75, and that also already goes back to January 22nd. So this is a huge date to keep that in mind. Mark that on your calendars, and mark that on your charts. And if you see that crypto starts to crash below those areas for Bitcoin, for Ethereum, then we're done like a donut, guys. Absolutely done like a donut. So we can see pretty much for Ethereum the same kind of pattern as well. Let me get my face out of the way. So Ethereum also dropped around 9%. It's trading at 29.11 right now. So the line in the sand that we need to watch, and that is going back to the 24th of January. That is when Ethereum had this big dump, and that took us down all the way to this level, and that is around about 21.33. So if we see Ethereum going below 21.33, then our next stop is 1700. So keep that Keep that date in your head. Keep that, that is the line in the sand, guys. That is the brick wall that we need to get past, guys. Absolutely, we need to do it. So once again, for Phantom is trading at $1.91 right now, and it's just at the $1.91 support level, and we need to watch this critical area here. If Phantom drops below this area here, which is the January 22nd area, and that's $1.76, then we're done like a donut. We will continue to go down, down, and that is not good. I know a lot of you are not happy to hear this news, but I'm telling you like it is, guys. This is the support areas that we need to keep. Right now we're seeing the Solana is at $94. We round up to $95, and that exactly at our $95 support level. We have some additional support around here at $80, and if we go below $80, then our next stop for Solana is going to be $70. So this is a key critical area from 24th of January, and we need to stay above the $80 area. Otherwise, we're going to be crashing down like a donut, like a stone to the bottom of the ocean, and we'll be going down to 70 cents, guys, $70, and that is not good in the house. So let's take a look at the total crypto market right now. So the crypto market is off almost around about 9.5%. We're down we're at 1.89 trillion. The volumes are still light though, guys and gals, and that's at 58 billion. And the Bitcoin dominance is also pretty light in the house, guys. So let's take a look at the carnage in the house right now. The carnage. So right now we're seeing that in the last 24 hours, Bitcoin is down 6.64%. It did drop as low as almost 8% in the house, 8.5%. So we have recovered a little bit. It's slightly down in the last hour. Seeing Ethereum is also dropped in the last 24 hours of 5.79%. We're up 0.11% at time of recording, guys, and we're at 2,900. I think we're going to get ourselves above $3,000 pretty soon, guys. I think we'll probably hit $41,000 by late afternoon here in Vietnam. We're seeing that BNB has dropped as well, but it's up slightly right now, and we're seeing the ADA has dropped 4.37%. I'm a buyer at $1. Solana is also taking a hit, but you see that the coins are slightly recovering right now. We're seeing even Doge going up a little bit, and Doge at 14.1299, guys. So do not panic in the house. Like I said, those lines on the January 22nd and 24th lines I've just discussed are critical lines that we need to stay above. We got the executive order coming, and Michael Saylor says that regulation is cool beans. I think it's going to help the institutions ape in, and I think that by springtime we're going to get an ETF, and I think you're going to see a complete reversal. I wouldn't be panicking too much in the house. So with that being said, guys, go and follow me on my Twitter. Follow. Go down there, smash the likes, subscribe, comment, guys, and don't forget to leave a super chat. I would really appreciate it. Go and check the Wifey's channel. Go do it right now, guys. She got a new video coming out, so go do it, guys. And don't forget to check out the merch, guys. You want the merch, I want the merch. Get the hat, get the mug, guys. Get all that cool stuff. So overall, guys, do not panic. It's not the end of the world, guys. It's just the beginning. I love it. You love it. Let's get it, guys. God bless each and everyone. See you in the next one. Woo!